Hello, Amanda. How are you?
Hey, good.
That's good. Welcome, Monday, and happy Monday. This is a continuation of our financial resilience, financial updates with Leanne Mitchell at Numbers Count Gerringong. Good morning, Leanne.
Good morning,
And good morning. Today we will be focusing, I should welcome you also on behalf of the Kiama District Business Chamber. So Council and the Chamber have been bringing these webinars to you now for, I think it's about 10 weeks is my best guess. And we've been running these events on a Monday and a Wednesday. They've been really well attended. And today we're also going to have a focus on cash flow. So I'll hand you over to Leanne, and I've actually got to go, so I apologise for having to leave the meeting. But we're also having another webinar on Wednesday. So if you haven't received those details, please let me know and I can send you the registration link. So Leanne, I'll hand over to you and hopefully see you Wednesday.
Okay. I'll close that. Pin you all down here. So, good morning all. And I apologise for the light on my face. I've moved my computer around and I just can't get the lighting in my office right. So I apologise for that. But yeah, welcome you all. We did skip last week, so hopefully everybody's been out and about a bit. Certainly was busy. I headed up to North Wollongong yesterday and there were just people everywhere. So certainly the cafes and things were doing well. Different reactions to the social distancing thing. Some people were doing it well, some cafes were doing it really poorly, but it must be very, very difficult. I obviously work in an office environment and social distancing is very easy for us to manage. But in some of those cafes, you know, where the owners are trying to run the cafe, make coffees, trying to self-regulate people moving about in the coffee shop and where people should stand, I think it's very testing and trying times. So I know my heart goes out to all of those people who are in retail and cafes and restaurants. I think it's just a really tricky time in business and a whole nother level of business acumen that you didn't get any training for and running on the spot. And so today, I wanted to cover today the new COVID safe badge, which I think is really interesting topic for conversation, but we probably won't have a conversation about it. I'll just mention it. The ATO talking about investigating JobKeeper, the JobKeeper registrations for the remainder of the year, and have a look at a little bit of year-end tax planning with the ATO and what JobKeeper means for you, and having a little look at the JobKeeper ceasing in September and just revisiting some of the valid points around making sure that everybody stays in the system for that up until that point. So the first thing that I really wanted to talk about today, because I think it is really relevant and I don't know how it's going to affect different businesses. And I did actually hear Gladys give out this little piece of news, which I think each business will take differently depending on where they're feeling that they're at. But so New South Wales businesses are encouraged to sign up for a COVID safe badge so that people wanting to use your business can go onto the website and check that you're registered and that you have a process in place so that they feel safe in entering your cafe or your business on whatever that is. And I can see that this would be probably very pertinent in some of the busier centres. I don't know that regionally it's such a big deal, but it does, you know, add another level of difficulty, I think, for people opening up their businesses and doing business in the near future, and how people, but I understand that people need to feel safe coming into your businesses. So obviously we all need to assess what that is. And, you know, it's interesting that when we talk about marketing our businesses and keeping our brand alive with our customer base, we still talk about going back and surveying the people, some of our best customers, some of the people that use our services all the time, and checking in with them about whether we're doing things well, whether we need to change things and how they're finding the experience, because they're the key people who have that experience out of our businesses. I think this is another one. I think when it comes to the COVID thing, communication is key. Talking to the people that come into your business and making sure that they feel safe, because people are talking out in the community about how different businesses are doing well and who isn't. Have those conversations where you can with those customers and clients that come into your business, and see where they feel safe or unsafe, or whether they are not sure how you're doing it, because every business is doing it differently. So sometimes there's yellow lines, sometimes there's crosses, sometimes there's manual barriers. But even as I realised, just walking into different businesses yesterday when I was out and about, was trying to sort out, as I walked in the door, what am I meant to be doing? What's the process need to be looking like? And what, without some sort of instruction at the front that tells me what I need to do. It all seems a little bit convoluted in some ways, but obviously for some people to feel safe, it's the right thing. And obviously community's judging it, because I know here the poor berry donut van has just copped it continuously, because people are not self-regulating their own social distance, and it doesn't become the responsibility of the business to make people do the right thing. And I hesitate to think that. I think you can guide people, but at the end of the day, they have to make their own and be careful about their own social distancing practices. But geez, it puts a lot more onus. And I think as small business owners, just another level of regulation that we need to look into. And, you know, one where, again, we're judged by community. So please, if you're unsure, ask around, ask your clients, ask the people coming into your business whether they feel safe, what they think might be useful. Just be careful who you ask. Everybody's got an opinion, but those people that you think will give you the right answers. So under this access to this new tool, which is obviously that there's a whole form that you need to go through the 3 easy steps that they're saying to make your business COVID safe, and what they need to do. So it's basically saying this may include physical distancing, cleaning and record keeping requirements. Once businesses have completed above steps and finalised their COVID safe plan, they will be able to complete an online self-declaration. So again, I do concern myself about where this sort of information goes, but if this is going to help people use your business more regularly and feel comfortable about it, then obviously it's the next COVID safe credential that we all need to step up for. There's certainly, I was surprised at how quickly we've been let out into community in larger sums, which is great for individuals, but I think very, very tricky for the small businesses that are all trying to manage all of those changes around everything else that happens. And grateful for JobKeeper, because at least you can have extra staff on hand to just try and make sure that your business is comfortable for people coming in and using your services. The next point I just wanted to bring up, and certainly if anybody's got any questions about it, but and again, judgment by community and all around, you know, the ATO is stating that they've been flooded with complaints linked to the abuse of the JobKeeper program, with employers found guilty of deliberately rorting the system of facing penalties of up to $126,000 or up to 10 years imprisonment. I've never experienced a tax office doing such things, but they certainly are threatening it. And they've got a complaints hotline now so that you can ring up and job people in. Love that. I'm assuming that that's for people that are blatantly doing it. On the whole, obviously, most people are just trying to struggle through survival. You know, the ATO for the spokesman said they're committed to tackling illegal activity and behaviour of concern to protect honest businesses in the community. But obviously be careful, make sure that you're keeping records for everything that you do, because you do not know who's going to say what about your businesses. Just make sure that you've got evidence to support everything that you're doing in the JobKeeper system. And I think when you look back, those that engaged in this system from the beginning, when you look at how clunky the system was to get into it, I think most people that I know, we kept as many records as we could, and we certainly engaged in activity and conversation around how we registered and what that needed to look like. So I don't think in our region we have too much to worry about, but and I certainly, for our clients, I know we've got adequate information and support. So yeah, they're talking here about a blog post that they've referenced on a law website that businesses manipulating their turnover to meet the decline in turnover test by deferring issues, invoiced or processing customer orders will be required to repay the JobKeeper payments together with interest and penalties. So I think none of us are really silly enough to not realise that we're lodging BASs. The tax office is going to have a fair good idea who's going to be right and fall within it and who isn't. And there's other things here, because if you're manipulating your turnover here, you're going to have GST issues. There's going to be all sorts of things that you'll be non-compliant for, which will be an issue. And how they actually deal with the anti-avoidance provisions that relate to not only the JobKeeper, but all of the flow out of the income tax effects and the GST effects. So the evidence that they're looking for, so these are just some things to make sure that you've kept records about. This is the tax office have said the things that they are critical in keeping is correspondence with customers relating to their ability to pay on normal terms, details of any government restrictions at any specific time, so what your restrictions were that affected you. Now, the difficulty with all of these things that I am discussing and considering here, they're not actually in relation to your normal business trading records that you would need to keep. So it's interesting that, again, there's a whole nother level of compliance that's being forced upon us to prove that we're doing the right thing and we were legitimate at the time, which again was always, I think, going to be an issue once the tax office got involved, because I do think that over the years they've come to trust people less and require more proof and onus for anything that you wish to claim. So records showing a decline in customer orders or inquiries, well, again, it's either a sale or it isn't a sale. I just think that that's too difficult for us to be able to maintain on top of. Documents showing changes in the business's supply chains or other external factors that have required the business to defer or bring forward the making of supplies. I just think that if you've done everything in accordance with how you would ordinarily trade, then let's stick with that. Because what is that actually going to require? But again, that's falling back to where people are saying, well, you held off putting invoices through for supply until a later date to invoice it because that order came through. If your orders are coming in externally via email or phone calls, that you would ordinarily have records, I would think. And for those with shop fronts, obviously your shop front is either open or it isn't open. If you were closed or required to close, or you had staff down, again, the onus is then back on you to prove that you were shut for those days, which does create obviously a whole nother level of compliance. But financial analysis of the commercial benefits of adapting the business's practices to address changes in the market of other external. So again, they're looking here at the fact that you had to send staff home, people working from home, only able to open your business at a particular time because you're restricted access, restricted number of people that could come in to the shop, and any other restrictions that have played out for you. Again, I'm concerned that these are just requiring us to keep more records than we normally have to, would have to keep. Directions to us, correspondence with employees explaining the reasons why a business has changed its ordinary practices or a particular decision. Now, I know in most small businesses, even for us, we would have a staff meeting about it, make some decisions, and we do keep staff meetings, notes for those meetings, but in smaller businesses, you wouldn't ordinarily do that. So it's going to require, go back, make some diary notes of things that you did at particular times. And it is difficult because I think at this point, we can look back and say that particular things happened at a time, but JobKeeper, we now give that it was a given, but in those first 2 weeks when we were all shut down and the whole COVID thing became live, we didn't have that information. We didn't know that JobKeeper was going to be installed. We actually didn't know how we were going to run our businesses. So different people made decisions at that time. And then it was, point A was how we actually ran our businesses. Point B was that point in the first couple of weeks where everybody's in panic mode. What do? Put people off because we don't know how we're going to pay wages. We don't know whether people are going to keep buying our product. Who's going to be still active? Who isn't going to be active? Which businesses are going to be alive for us to interact with? And that was a whole very, very strategic position in all of the rollout of how we all engaged our businesses in the ensuing months that I think some people are ignoring, but it was really quite significant. Then week 3, we've got JobKeeper. How does that apply to our businesses? Which staff? Go through the eligibility checklist. Who does fit into that? Who doesn't? I even know that there was a point, because I remember having the conversation with a client where we weren't sure that sole traders were going to be on the JobKeeper system. So there are times during all that process where even for us, something was not clear this day, it then was clear here, and then that might have varied. I think that it's all a little bit tricky. So all we can do is do our best. But at this point, I would suggest sitting down today and going back and trying to record what happened at different points during that period, and see if you can fill in some gaps about your own story. I know I have a blogging coach that I do a little bit of work with around business practices and things. And she did say to all of us, week 1, keep a diary, keep a blog of what's happening. But of course, with everything else going on, it just didn't happen. But I think it would be invaluable to look back on. But again, look, the ATO can data match its processes, so it'll have its own ways of working around who had the right to JobKeeper and who didn't, and their rights to. I suspect that there are more people that didn't apply for JobKeeper that could than did and shouldn't. But anyway, we'll see. The next point, so just I really wanted to make sure and highlight that once you are on JobKeeper, you triggered once and you got on, you stay on the system until September. So even though the tax office is asking you to put in current month's trading figures in your declaration and your anticipated sales for the next month, it does not matter if you are back to normal trading terms and you're under that 30% difference. Because we've had some clients that are sort of down to, a 10% variance, a small variance. But once you are on the JobKeeper system, so say you qualified in April, you keep putting in your declarations every month right up till September. You have the right to continue to be paid till September. But if you don't put that in, the tax office is not going to follow you through. So I really want to make that really clear to everybody, because different people are going, oh, well, next month we probably won't make it, so we won't be on it. Just a reminder, you stay on it till September. You have the right to. Of course, you have the right to also pull out, but you have the right to stay on that system to support your staff through to September. The notifications from the tax office that have come into our office this week have been mainly about the influx of early tax returns, because people are going to want their tax returns in early because they're going to want their refunds, especially if they went on to JobKeeper and they lost a substantial amount of their taxable income for the year, especially those who continue to pay PAYG instalments, small business clients who operate as sole traders or partnerships, who weren't sure what they would do and kept those payments up, or the payments still exist on the tax office and we need to vary those back to nil. Those people are going to want their tax returns in quickly so that they can get those varied down and know exactly what their tax situation is. The tax office have created for work-related expenses a temporary shortcut method to apply for work-related expenses from the 1st of March to 30 June. Now that will be in relation to work-related expenses, but it's also relevant to sole traders if they wish to take up that option where they were working from home. The shortcut method is fairly well set out on the tax office website, but basically it's 80 cents per hour for every hour that you worked from home. So those people on wages, that's easy because they would have been recording their time with their employer. So their 80 cents an hour is valid. For small business clients, obviously just to do a best estimate of the sole traders of how much time you actually spent at home doing things. But it is an all-inclusive claim. So it is meant to include all of your electricity and overhead expenses, internet and those things from home. Obviously you can choose to use the shortcut method or go through and calculate your expenses using, your actual expense claim. Now, income statements for everybody this year will be on the MyGov site, so it's going to rely on your employers just finalising those PAYGs, and then that will get finalised onto your MyGov account. Anybody using MyGov would know that those things already exist on that system. If you use a tax agent, obviously we have access to those as soon as they're finalised. Now, sole traders who have been receiving the JobKeeper payment on behalf of their business need to include the payments as assessable income in their business. So I would suggest that that's other income rather than sales revenue in your business, and it's a taxable amount of money. For those who access their early super, that will also be on the Tax Office MyGov website, and there are special arrangements in relation to how those will be taxed. Here we're saying Aussies rushed to lodge their early tax return following a tax cuts package, saw the getting their 1,080 rebate, which existed last year and really was already in the tax rates the year before. But anyway, it is still in existence. Yeah, they just the tax office is going to be challenged to get all of these refunds out as quickly as they normally do, but let's see how they roll over this system. They've certainly had a lot of pressure on them over the last few months over the whole JobKeeper system and regulating that, which did mean that there are a lot of people, a lot of extra employees at the tax office, and a lot of them with less and less experience. But let's see how they go. Now, my next point is with JobKeeper ending in September, and we're now into the third month, so April, May, June, we're completing the third month of we've been receiving those payments, obviously in arrears. But with all of the social distancing and other restrictions and implementations, a lot of businesses still can't get up to normal trading. So if your business has been shut or your revenue's dropped and your cash flow is a little bit lumpy, you still need to start to consider now how your cash flow is going to manage once you get to the end of September and everybody comes back on board. The difficulty with this is we still don't know, and they're leaving us week to week, literally, with new restrictions. What will the social distancing look like at the end of September, which is going to obviously affect how we're all going to commence trading once the JobKeeper actually stops being paid. So, you know, the conversation obviously and the documentation we're getting given is, you know, to ensure that your business is ready to go, that withdrawal of funds is not going to stop you from trading. But obviously with all of the existing regulations, we still don't know what that's going to look like. And for most of us, you know, as I was saying, the cafes and things out and about, if those restrictions still exist, then their income is going to be restricted accordingly because they can only serve so many people in a particular space. And it is key to whoever you utilise to support your business. You literally have 3 months to get a plan in place to see how you're going to catapult out of into October, to see how your business is going to look. And there's so many factors you know, whether you've lost suppliers that are no longer there anymore. Importing of goods obviously is very restricted currently. So what is your supply chain looking like to supply to your customers? Because that may roll out that doesn't look ordinarily anything normal until, you know, in next calendar year. So have a really good solid look at how your business can come out of the next 3 months after JobKeeper and how you're going to utilise that cash flow opportunity until December to keep yourself trading and keep your supply in and out, whether that be service industry or actual goods and possibilities. It's just really imperative that you look forward and adapt and have a look and see how that's going to look. It's the age old, if you've ever done any coaching, this is the time to start working on your business. Whilst you've got some staff that can be working the front of house for your business, get back and start having a look at how you're going to plan the ensuing and really get a little bit of focus on working on your business coming out the other side. Because the thing we all know is there's no way our businesses of February are going to look the same even when we come out in October, and they may not look the same ever. They're just really interesting times, and as sole business owners, we only know what we know, so please be really clear. You can't know and have experience that you've never experienced. So find yourself somebody that you trust to work with, to work through how you want to plan to come out the other side of this whole COVID thing, really, really, and into Christmas. We can only hope no bushfires, a busy Christmas period, and the tourists keep coming and stimulate our economy. And I think the last month has been very, very busy in Gerringong and Kiama also. And hopefully, if that front of house is spending money, then the backflow of that through the chain of supply in Kiama is continuing to remain solid. So that's sort of my update. Does anybody have any questions they want to ask while I'm here? Anything they're experiencing?
Tax office have even been calling us on weekends. I don't know whether you've experienced it, but long weekend I had calls on Sunday and Monday.
Nobody here answering our phones, Rod. So yeah, no.
No, they go straight to the phone.
Yeah, it's interesting because obviously I've still got the same phone number I had back when I was a sole practitioner on my own and had no staff, and basically my mobile was my roaming office contact. And just occasionally I do still get calls from the tax office now. I mean, I've been in this location for 18 years, so it's pre-18 years ago. You still get some of those clients. If they're ringing regarding those clients, they'll ring on the mobile. But
and we had the New South Wales State Government with their grant ringing up on the weekend as well. So.
Oh, really? Well, I had 2 clients last week finally get their money. So that's been a long, convoluted process.
They've got delays, they say, but they've yeah, and a lot of people, what they've had to do is they haven't lodged the right authorities, so you've had to then get them to contact the client to show, even though we've got emails from them authorising us to do it, that they're saying that's not enough. So they need to talk to the client and ask the question, do you authorise so-and-so to do it? And as soon as they say yes, then bang, they're fine. So.
Yeah, well, it was interesting because even the requirements for that grant changed. So those people who jumped in the first week and got on, then and registered and said that they'd done everything they needed to do, and then 3 weeks later we're getting calls going, no, we need more, we want a different type of declaration, and they can't declare it themselves. They had to, if you're not in one of the industries that they believed should have been affected, then it was up to us to give them third party authorisation or validation that their claim was valid. So, but I did notice that grant's been now extended out to the 30th of June also.
31st July.
31st of July.
Yeah.
Okay. So that would mean that those people, because again, I've had clients who didn't trigger into JobKeeper until June because they were selling up until May, and you've got that delay of being paid 30 and 60 days, and cash flow, something we'll have a look at in a minute. And so therefore they still had enough money flowing in April and May. They had no activity, but they still had cash flow coming in. And because the JobKeeper is reliant on your GST income, which is cash, most of our small to medium businesses, then they still didn't trigger onto JobKeeper. So they either had to stand their staff down for a period of time or continue to pay them and keep trading with the best that they could. So there certainly were little trigger points in there that were probably not in the planning or nobody foresaw. I actually had a phone call from the Small Business Council of Australia in Canberra on Friday, and we're supporting them with some case studies of what happened to some of our clients and whether JobKeeper worked and what did and didn't work. And I think the anticipation is that this won't be the last time that we're going to be in this situation. So it's interesting that the federal government are taking seriously the potential that they may have to offer it again. So interesting times, isn't it? Just so different, and could never have anticipated in 2019 that 2020 would look like this.
Oh.
But yeah, so that's interesting. So I'm just going to shift on to, just going to just get myself a drink of water for a second. My throat's dry. So I wanted this morning just to have a quick look at cash flow. I'm having trouble getting my document up. Hold on, let me see if I can't get this thing up. I did a bit of a just a quick overview, just to give you some examples of what I need you to be conscious of and to have a look at in the next few months, because it's going to be more significant than ever before. Let's see if I can't get it up. Beautiful, here we go. Hopefully you can see that. Okay. All right, so what I've done here, can you see that, Rod?
Yep.
Okay. So what I've done, and just because I think to go through it and actually see it in play and think about how it anticipates in your business. Now, I always find webinars a little bit trickier to try and do this than normally when you've got people in the room. But I'm just going to use a retail business as an example because I think that it's easier for you to have a look at. So I've just done one transaction, and so it's trying to look at the multiples of how this would affect your business. So say on the 1st of January, I purchased 20 pot plants to put in my retail shop front. So I spent $10 each on them, and I'll sell them for $20 each. Now, I purchased them though on my account. So whilst I've got them in the shop, on the shelf, I don't have to pay for them until the end of the month. So at that point, I've got a transaction for $200, but I've not spent any money. But I actually have a product to sell on my shelf. So when people come into my shop, I've got something in there to sell, but noting I still haven't paid for it. Now on the 4th of January, Mrs. Jones comes in and buys 2 pot plants with her credit card. So when we have a look at and trying to distinguish between our transaction list and our cash list. So we've had a transaction of $40 sale, but we've also actually received $40 worth of cash into our system. But on the 10th of January, the local gift shop comes in and they buy 12 of my pot plants, but they buy from me a lot and they've got a 30-day account. So whilst I've sold 12 of my pot plants, I have a transaction for the sale, but I still don't have any cash. So watching the total of my cash balance here, I've had 3 events happen and all I've got is $40 to show in the bank for it. So now we're to the 25th of January. Now, all of the other things that's happening in your business, this is one transaction we're having a look at. So on the 25th of January, I sold 3 more pots for cash. So I've got another $60. So currently in my bank, I've actually got $100 in my bank account. But here we are, the 31st of January, I've got to pay for those 20 pots. So I've got a transaction for $200 that I have to pay out, but I've only received in $100 because I'm still waiting for the $240 and I've got 3 pots still sitting on the shelf that haven't made me any money yet. So down here, it's interesting, isn't it? That's in our net cash position is actually a minus $140. So we've sold, but we just don't have the cash in the bank. Now, this goes for every single transaction that goes on in our business. It happens in our tax accounts because the same when we pay wages or GST, we sell a product, we don't pay the GST for 3 months. When we buy a product, we claim the GST, but we don't get that back until we actually lodge our BAS. So it's actually of no value until the quarter ends. What I want everybody to understand is the importance of knowing what's actually going on in your cash account versus what's going on in your profit and loss. So I can have a till tape that says that I sold, $280 worth of product on the 10th of January. I'd sold one to Mrs. Jones, and I sold 12 to the local gift shop. So I've got sales for $280, but I haven't been paid for those yet. So whilst the sales can look good, what I've actually got to spend in the business doesn't look so good. But I need to put that money aside because I know that I've got a $200 bill to pay at the end of the month. And this is really important when you look at how much stock you put on your shelves and what you have left on your shelves, because I've still got 3 pots to sell at worth $60 on the shelf, but I haven't been paid anything for them. The gift shop owes me $240, but I've had to cough up out of my own pocket $100 to pay for those pots that have come in. So in the meantime, I still have to pay for my rent and for any wages and my overheads and my electricity every month. So you can understand that whilst buying and selling on credit enables you to boost your cash flow around, you really need to be conscious of how much you're tying up, because even those 3 pots sitting on the shelf, all of your stock sitting on your shelf comes out of your cash flow. So they're now sitting there at the end of the month, and I've actually paid for them, but I haven't sold them. And until I sell them, I've got money sitting on the shelf. Whilst they have a retail value of $60, there's still $30 worth of value that I paid for them sitting on the shelf. You multiply that by every product you have sitting in your showroom, and that starts to become a huge factor in your cash flow. So when we have a look at how we negotiate our payment terms as well, to be very cautious of how often we turn over our stock, and then how long we leave things sitting on a shelf, which is why often you'll find that shops will then put those 3 pot plants out and just try and recover their $30 from their original investment so that they can buy new stock and keep turning over the stock in their shop. But so in this investment, I've got $240 that is owed to me. I have $100 that is owed, that I've overpaid for product, and I have $60 worth of product sitting on my shelf. So I've got assets, I've got money, and I've got stock to sell, but I've got no cash. So I can't go and buy any more product to replace what I've given to the gift shop up here, because I've given it to them on a 30-day account. But whilst they've got it on their shop able to sell, I don't have the cash to then go out and buy more. So then I have to go out and buy credit, use my credit again to go and buy more and hope she pays before I receive my next payment. Now, this happens with every single product on your shelf. And it's a really important exercise to go through, and significantly important as we come to the end of September. Be careful what stock you have sitting on your shelf, what things that you've invested into your business, and how you're going to recover those. We've got, it's an interesting example that during COVID in the early days, so people who shut in, basically had restrictions from early March, what they weren't doing, because they didn't know what was going to happen with their business, they started to sell off their shelves. So they were selling down their stock, which is great because then they're creating cash. But at some point, when business is going to get up to its normal level, to be able to get to our normal sales level, you have to be able to replenish that stock. Now, how are you going to do that? Do you still have credit terms? Do your suppliers still there? And you've got no guarantee of how you're going to sell that stock out. So we need to be really, really conscious of potentially not creating stock back to the level that we normally had it, but try and keep it down to things that turn over fairly quickly and create us money in and money out. Be careful of who you're giving credit to, because again, in this day and under these situations, that local gift shop, if she's been shut and she's got 12 of your pots, you may struggle to get the money from her. You may get bits and pieces of it. So where you're selling on credit in current these COVID times, where cash is very tight and businesses aren't trading at their normal levels, she could be using, that gift shop owner could be using that $240 that she needs to pay you just to be paying her rent or pay her wages, and then the money isn't there to pay you. So be really, really conscious of who you're giving credit to, and maybe consider not giving credit. Maybe you change the way that you deal with some of your customers. And whilst that may restrict your sales, just consider how you're going to get paid if you give it out on credit. Maybe you do 50% in cash and 50% on credit, but be conscious of how you're actually acting and how that is going to affect your business. Because again, we've had money coming in for JobKeeper, so we've had excess cash coming in to be able to replenish some of those things. That $3,000 a month will stop, and we won't have that. So make sure that you've got some cash, you've got a nice stock level, you've got enough transaction going on in your business that you can keep it turning over to be able to create enough profit margin for you to be able to pay your expenses, but also not get yourself into so much debt or further debt than you really can manage at the present time. Because in all of this too, you've still got GST to be paid and relevant income tax. Now, thing that I have discussed with my clients, and it's really significant, is a lot of people postponed paying their GST March quarter BAS, which depending on whether you lodged it yourself in your business or whether you actually handed it out to a tax agent, in which case you had an extension to the 28th of May, and then the tax office gave everybody an extension to the 28th of May. That date's come and gone, but with holding out during that period where very few of us were trading, a lot of us are now holding bigger debts than we normally would because we actually didn't have the cash to pay that GST bill. So people who ordinarily stay on top of their tax arrangements have gotten themselves to a point where they've now got this overhang of this tax debt. Now, the tax office are currently negotiating all over the place, giving you extensions to those to September. But again, then there's this real cash flow point in September that everybody's going to get caught at. So it's really important to start to have a look and really plan what the next 3 months are going to look like for you. Set yourself some budgets so you know how your cash flow is going to come in and out. Be really cautious about buying products that you know don't sell. Really aim at buying things or offering services to people who are actually going to pay you for what you're doing for them. Limit the amount of credit that you're giving out to other businesses. This is about survival. There are different modes of operating in a business where you can survive or you can thrive. At this current moment, there are some businesses who are thriving and doing quite nicely, especially for us. I see a lot of the construction industry and the trades guys. They've not so much thriving, but they're doing okay. They're certainly not in survival mode. But for those of us that were directly affected by COVID, a lot of that is just survival. And we need to be really, really cautious that winding down was certainly a significant issue, but we were able to utilise stocks that were sitting on our shelves to sell or draining down the resources that we had to sell on. But now, if we're going to lift our business back up, we need to replenish those resources. And what does that look like and what costs do we need to invest? Because really that's what it is. And for a lot of us, the only time that's ever happened to us before was when we actually first started business, when you actually had to go out and invest those initial amounts of money to buy stock and buy resources for your business up front, and so that you could actually even open the doors and have something to sell. So we're really, really conscious, because you have 3 months to get this right, 3 months to have a look at how that might roll out for you and get some advice about what that end point might look like for you once we hit the 1st of October. I think generally in our region, the tourists start to come in December, and hopefully for most of the businesses in our area, that would create the positive cash flow that might support your business coming through the next December, January, coming off that most businesses struggled and had a very poor December, January with bushfires. So again, I think if 2020 has taught us nothing else, we have to be very cautious about our decision making about where we invest our money in our businesses, because the bushfires and the COVID showed us that sales just are not a given, and the things that we took for granted in our business and the highs that we were able to roll off, good Easter tourism, good Christmas tourism, which whilst you may not be a front of house, may be that you're in the supply chain of one of those front of house tourism businesses that you relied on. So that's been missing during this year. So be very, very cautious and think twice about where you're spending your money, how you're getting product and how you're selling your product and service, and what credit you're giving out to people. And I do think it's one of those times where there is give and take in a business and in a community, but I think we do have to be very cautious of looking after ourselves and making sure that you don't get yourself into a stage where you end up with a whole lot of debt that you have to write off because people have not survived out of the October period. And I do think that October and November will be the trickiest period for most of the small businesses, whilst a lot of them I don't think are aware that that's going to be an issue. But for those of us who have been diligent in our businesses, I think it's really important that that you have a look at that. The other thing to be really careful of through the next 3 months is be very aware of what your accumulating debt is and where it is. Make sure that you are aware of all of it. And if you have payment arrangements, try as much as possible to stick to those payment arrangements, because that will guarantee your supply. Because again, when we're looking at restricting who we're giving credit to, so are other businesses wanting to do it to us. So that will have an effect, I think, on the role of the entire economy and how people spend their money. People are going to want the guarantee that they're going to get paid. Nobody wants to be on the receiving end of that liquidation notice for a client that owes us $5,000 or $6,000 for some product that they promised us they were going to be able to pay us for. I don't think anybody gets into that situation on purpose, but ignorance is not an excuse in a period such as we're going through now. It's the resilient, those who plan and those who are cautious and careful at this time that are going to make it to the other end. It is not the time to be flamboyant in business, whilst we all have learning curves to get through, because there's not one business in our arena, including myself, and I've been in business for a long time, that has seen anything like what we're all experiencing now. And remember, whatever you're planning and looking at, so is every other business. So everybody's in the same situation. We really are all here together, and be cautious about those conversations, but have them, be open about them, because everybody's going to need to have them so that we all understand where we're all standing and how we get paid and how business continues to roll on. So I'm going to leave it there. I wanted to keep this fairly simple only because it's very difficult to have questions and answers. But has anybody that's online got any questions for me whilst we're having a look at this? Amanda, how are you going?
Yeah, good. Just kind of working it all out and everything. We're brand new, so just kind of learning the ropes and everything.
Yes, understand that. Yes, and you're right at the beginning of it, which is a very difficult, a whole different challenging time to get into business. So, yeah, yours will be probably a very slow start, but slow and steady does it. Because as I said, I'm concerned that a lot of businesses aren't going to make it to the other side because they're not spending their time to do the due diligence and make sure that, you know, they're ready for what this economy is going to throw at us. So it's really interesting times, and I wish you all the very best. I'll close up now. Megan has had to walk away, but I wish you all the very best this week. I'll be back on next week. Next week, I'll be more focusing on a little bit of year-end tax planning. Even in my staff meeting this morning, I was talking about how all of the year-end tax planning and business planning for this year is looking so very different to what it has before. Very few businesses have come out of this really doing particularly well. Whilst the construction industry has stayed buoyant, I don't think any of them would say that they've had a boom year, because those that weren't affected by COVID certainly were affected over the Christmas period by the fires, especially in our regions. So I love that all of our community are in this together, and watching the people flooding back to Gerringong and Kiama, even without the correct social distancing, it's nice to see them come and spend money and remember how important we are, and enjoying our time and enjoying what we have to offer, and the wonderful region that we get to live in, that they just get to visit. I I must admit, I've been here a long time, and when the tourists leave on a Sunday afternoon, it's going, oh, great, we can breathe. But be grateful that they've been able to spend some money in our economy and keep us stimulated and buoyant. I did have one of the staff went to a client's in North Sydney on Thursday last week, and she said it's very, very quiet in Sydney still. So it's really interesting to see that that is certainly not what we're having in our little areas down here.
It's different in the suburbs, Leanne, though. In the suburbs, it's maniac.
Oh, really?
In city, yeah. So they're people, shopping centres having like 5 or 10 times more people in them instantly. So
wow. Okay.
Lack of social distancing. There's some shops that do, some that don't. Compared with like the rural and Bullo where I'm spending my other time. They're still relatively quiet, but you can see the extra people in there straight away now that the cafes and the pubs have opened up. So.
Yeah, it's interesting how the different ones. I know in a cafe yesterday they'd left all the tables out, but they put big signs on them and said, so they didn't put chairs at them, but it created that ability to social distance. And they're different, being very clever. One cafe in Berry actually has, you need to register, so either walk up and register or you ring in and book in, and they just text you when the next free table is, and they have a little Q code. Have you seen those, Rob? They've got a Q code that you scan to register your attendance at that business so that they can contact you should anything go wrong. So
you can even look at their menus and online orders through those Q codes as well. So.
Oh, I haven't seen. Oh, I have to remember that. Interesting.
Well, they've only been in the city for about 30 years. So.
All right. Okay. A bit of regional. Well, thank you for that. I'll actually go looking for that now. But yeah, it's just interesting that some of the regional businesses are now picking up on that. So, which is fabulous. The range of food that we've had available to us, even in this COVID, has been pretty wide. So we've been very lucky. The businesses have worked really hard to keep going. Anyway, I'll leave you all, wish you all the very best, and I'll see you next week at about 10 a.m. Until then, take care and enjoy this winter. The weather was beautiful. Keep on keeping on.
Thank you.
Take care. I'll see you all next week. Bye.
Bye.